The second quarter earnings season will begin with TCS results on Wednesday, followed by Infosys and HCL Tech on Thursday. The Street, however, does not have high expectations from Indian IT majors following Dublin-based Accenture's soft earnings in its latest fourth quarter and a higher-than-expected moderation in the revenue guidance. Citing client caution, which is weighing on tech spending, Accenture laid out a 2 to 5% growth target for FY24. In comparison, it saw an 8% growth for FY23. As a global backdrop of high interest rates remained unchanged in Q2, IT earnings will thus largely be muted in line with the previous quarters.
So for IT, September quarter is expected to be similar to what had happened in June quarter, and that is due to the uncertainty around macro environment. On financial front, we are expecting revenue growth to be in the range of -1 to 3% for large caps, but for mid caps, we are expecting a tad better revenue growth in the range of 2 to 4% quarter on quarter. For margins, we are just expecting 20 to 40 basis points improvement, as there are mixed sentiments wherein on one side, cost optimization measures are taken by the company, but on the other side, a salary hike may impact margins.
Analysts at Kotak Institutional Equities see yearly constant currency revenue change in the range of negative 2.9% to plus 3.2% for the Tier 1 firms, as a broad-based weakness will be amplified in banking, retail, and telecom segments. Those at Nomura also remain watchful of the BFSI and communication, media and telecom or CMT verticals. IT budgets will likely be prioritized toward automation and cost efficiencies in the near term, which will hurt discretionary spending. Some positives, such as falling attrition and salary hikes returning to usual levels, will continue, but we remain cautious on the sector given limited visibility on a turnaround in discretionary demand. The global brokerage said. At the bourses, the Nifty IT index is up 13% this year as compared to an 8% gain in the benchmark Nifty. The rebound came as the street priced in the beginning of rate hike pauses this year. But analysts do not expect companies to guide for a sharp pickup in growth for the rest of the current fiscal. HDFC Securities see a low single-digit 4% revenue growth for the sector in FY24, which it expects to recover to 9% in FY25. Thus, analysts suggest a selective stance on the sector. Besides, investors will closely watch out for discretionary spending trends, deal booking pipeline, and commentary on senior leadership exits and replacements in the IT sector from their results.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.